In this volatile and sometimes confusing market, many investors wonder where opportunities exist. According to UBS CIO, this is a good time to diversify with alternative investments, particularly private markets and secondaries. Sound like jargon to you? Well, no worries. We're going to break it all down for you today and open your eyes to some new investment possibilities. All on UBS Trending. And hello, everyone. Welcome to UBS Trending. I'm Anthony Pastore. I am joined by two guests here in the studio with me today. From our Chief Investment Office, we have Jennifer Liu, and from HarborVest, one of our partners, we have Jeff Key. So great to have you both here in the studio. Jennifer, let me start with you. I mentioned in the opening, we're talking about alternative investments today, which is an asset class that perhaps not a lot of folks know about maybe in depth, but they kind of understand maybe in parts, maybe what it is. They think hedge funds, of course. That's probably the first thing that comes into mind. But we're going to talk about alternatives, but with private markets. So maybe you can level set for us what those are before we get into the rest of the conversation.
Sure. I would start saying that private markets are investments that are not in traded public stock markets. There are three main asset classes when it comes to private markets. There's private equity, private debt, and private real estate. And these asset classes are complementary to an investor's total portfolio. What do I mean by that? Private equity is more equity-like. It is actively managed by managers. You have private debt, which is more focused on income, but less correlated to your traditional fixed income. And then finally, there's private real estate, which is a mix of both income and growth. At the same time, there's an inflation hedge. Mm-hmm. And I would say, for investors that are not looking at private markets right now, they're really missing out. 95% of US companies are privately held. And if you look at last year, the 60-40 portfolio just didn't really work. So it's definitely time to think about privates.
Right, the 60-40 traditional equities to fixed income. Right, exactly. And and private markets have experienced a lot of growth in recent years. And that's obviously a compelling opportunity. And as you said, 95% of companies are private. They're not on publicly traded exchanges, or they're not on, they're not part of the stock market, as people might call it. Now, okay, let's take it a step further. So now we kind of understand, in context what private markets are, but there's also a secondary market for private markets, which, by the way, as you told me before we started, you've been working in secondaries and private markets for 2 decades or so, and this is something that I think a lot of people are really just hearing about, maybe because of the opportunities. Maybe you could share with us a little bit more about that.
Yeah, happy to. So I'd say the best way to explain a secondary is to start with a primary. So a primary investor is typically committing to a private equity fund, which is typically a closed-end, fixed-term fund, at that fund's inception. What that means is they're committing to an entity that has a plan to go out and invest capital over a 4 to 5 year period, and then over the next 4 to 5 years, realize and sell the investments that have been invested at the front end of the fund and return capital to investors. Mm-hmm. So it's a 10-year plus commitment. In a secondary, the buyer, in this case, private equity buyer, will come in and provide liquidity to an investor in that fund prior to the natural organic liquidity coming out from the underlying portfolio. And so you're essentially, as a primary investor, getting out of that fund on a secondary basis partway through the life of the fund. Unlike the public markets, the private equity secondary market is a very small percentage of the overall private markets. In fact, if you think about the trillions of dollars in private markets today, the secondary market is only $100+ billion subset of that market. So it's a very inefficient, very untapped area of private equity, and that inefficiency is part of what has attracted so many investors to the asset class.
There was a lot of growth in the secondary market, though, over the last maybe couple of years. I mean, I'm looking only at data through 2021, and it was $134 billion at the end of that year, and it's probably since then, it's probably grown even more.
Yeah, look, the secondary market, again, got its start in the mid-1980s, and even into the 90s was doing just a few $1 billion a year in transaction volume. This year it will do well over $100 billion in transaction volume. So it's been one of the fastest growing areas of private equity. And the reason for that is the secondary market is there fundamentally to provide liquidity to what is otherwise a fairly illiquid asset class.
Right.
And all investors want that increased liquidity, and that's been one of the key growth drivers over time.
Right. Let's talk about the attractiveness here. Obviously, if you want to get in on the ground floor, you go in first. You're going directly to that private equity fund company, and you're buying directly from them. But then there's the secondary market. So why is it so attractive right now? And looking at supply and demand dynamics within secondaries, why is it so attractive to investors today?
Yeah, so look, one of the key dynamics within private markets today is that many investors are over-allocated to private markets relative to what their goals or targets are. And the reason for that is largely what's happened in the broader economic environment. So public equities have been down with increasing interest rates, fixed income has been down. That's caused actual allocations to private equity to be larger than their targets. So you have a very large swath of institutional investors who want to try and remedy that problem. And one of the best ways to do that, certainly the quickest way to do that, is to sell on the secondary market, which is creating, again, that impetus for the wave of transaction volume that has come to secondary buyers. So you have motivated sellers who are not focused on price, but focused on solving a problem that they need a portfolio management tool like the secondary market to fix.
Right, and we can see it in the chart here. There's clearly benefits. It's beneficial to be an investor in the secondary market. Thank you, Jeff. And just to kind of put this into real world context, we were doing a quick prep call yesterday, and we were talking about how can you make this make sense for the average investor. And I kind of asked you if it's kind of like the housing market. I buy a new property that a construction company made for me, but then I'm selling it 10 years later. Is it something? I know it's not exactly the same. Can you maybe, Jennifer, is that something you can equate to buying a home from the first owner if you're the second owner?
Yeah, I was thinking it's kind of more like, say, Anthony, you're going to start your luxury watch collection. And you can buy a slightly used luxury watch, and you can get it at a discount. And it still is going to contain the amazing value of that watch. So secondaries is sort of like that. Instead, it's going to buy a huge collection of these watches. And so you've really jump-started your collection of your watches instead of just buying one at a time. So secondaries is like that. Instead of primaries, when you're investing in primary, you're only exposed to maybe 10 to 20 companies. With a secondary fund, you are exposed to maybe thousands of companies. So it really adds to the diversification right away. And then second, I would say, is probably the discounts that we're seeing. Like I said, with the slightly discounted watch, you're getting a really good value at a slight discount.
Is that why you would, as an investor, perhaps even taking it a step further, consider secondaries in private markets? I mean, the discount to net asset value is pretty significant.
Sure, yeah, I would say discount is definitely one of them, diversification. And I guess the other important factor is just getting your money to work faster. So like Jeff mentioned, with a primary fund, it is a closed-ended drawdown vehicle, meaning the manager gets to decide when the money gets put to work. So it takes time. You have to go and find fund managers. You have to go across sectors and geographies and make sure you're not investing just through one time cycle. So it takes a lot of effort on the investor's part. With secondaries, you get that diversification, but you also get to put your money to work faster. Because these are slightly used primary funds, you're coming in at a later cycle of that fund. So you're able to get your distributions out faster and get that money and put it to work in else places.
Yeah, I love the luxury watch analogy that you give, because I know people who are into this market as well for themselves. You buy a watch that's brand new. You have no idea if it's going to increase in value over time. It could lose value, but in the secondary market, you already see that there may be value in that particular watch, and it's already growing. So you're thinking this is probably a good bet for me, and I don't have to do all the research that the other person did to buy it the first time out from a jeweler or from a store. Great, that's really good, Jennifer. Jeff, take it home for us. Similar question to you. If you're talking to investors, secondaries, give us the real reason why investors should really be thinking about this space here.
Yeah, so look, private markets, I think one of the reasons it's attracted so many institutional and individual investors over time has been the outperformance relative to public markets. And a lot of that is because of the nature of private equity, the nature, it's patient capital. The managers who are investing that capital can add value to the underlying companies and really control when they exit those businesses. I think one of the reasons that secondaries are such an interesting way to access private markets is beyond all the things that private markets offer. Secondaries are really the only way of accessing private equity where you can capitalize on the dynamic I described, where the pressure that institutional investors have to get relief from being over-allocated manifests itself in terms of the discounts that you're able to purchase assets at. And you're buying into those assets well into the life of the vehicle, where it's with much more confidence you can forecast the outcomes of those funds. It's like trying to predict the outcome of a basketball game, say a game 7, where at the beginning of that game versus having to predict the outcome 3/4 of the way through the game. You have a much better idea of where the outcome is likely to land because you've already seen how 3/4 of that game has progressed. And so if you're entering into a secondary that far along, you've arguably got a much lower risk profile, but you can still benefit from all of the outperformance that private markets can offer.
Terrific. This is great stuff. He shoots, he scores. I mean, is that right? Thank you both very much. And by the way, for our audience, we have our messages in focus here in our Chief Investment Office, and one of the new messages that we have this month, or an updated one, is diversify with alternatives. We see in our CIO, where Jennifer sits, a really compelling investment opportunity here for many of you. So if you want information on that, visit our website at ubs.com/views. Also, make sure to contact your financial advisor. They are the best resource of information for you to know what's right for your portfolio and your time horizons. Jennifer and Jeff, thank you very much. Good to see you here. And thank you all for joining us. Make sure to check us out on social media. We're on all the platforms, including Instagram, where you can find our newly relaunched UBS Trending Instagram site. Lots of great content up there for you there. And again, make sure to reach out to your FA if you have questions. Until next time, I'm Anthony Pastore. Have a great day, and remember to keep your eyes on what's trending. Thanks, everybody. See you soon.